How's it going, Martians? Welcome back to the report. I got two articles for you today. First being from Digital Asset Space titled Cryptocurrency Handling Emotions, FOMO and FUD. And this is a very important article that I think a lot of people in the space, especially now at the prices that we've been seeing, a lot of people need to get their heads about themselves, get their emotions under control. And so we're going to do just that when we cover this article. And afterwards, as the video is titled, we now have XRP able to be purchased at over 3,000 ATMs worldwide, with the largest manufacturer of ATMs having announced a few hours ago on the 29th, as of the 29th, I've just now seen this article, thanks to HODL Style, which if you are not familiar with HODL Style, you should absolutely check out their merch. I am an ambassador for their channel or for their merch store, so you can now find a link to that in my comments below. So be sure to check out HODL Style and show your support to me and to them by purchasing their awesome XRP related apparel in the link below. But again, the largest manufacturer of ATMs has announced that they're going to now support XRP. So before we hop into this first article about FOMO and FUD, let's talk about why we need to have a conversation about FOMO and FUD with XRP. All right. Now, a lot of people like to say that XRP and Bitcoin are highly correlated assets. And when you look at this 7-day price graph, that seems to be the case, right? After all, XRP and Bitcoin both spent the beginning of this week climbing and then the second half of the week in decline. However, look at what XRP has done when it dumped at the same time Bitcoin dumped. XRP recovered to its previous price point from before Bitcoin's dump. Not only that, XRP, and we'll go into the actual charts here real quick on the 7-day so you can see lines here. Let's get rid of the BTC and market cap. If you see here, XRP did not break its previous lows from this trend upwards that it's on. Its previous low being 18 cents point 89, right? And when it dipped down here, it went to 1901. Now, with Bitcoin, a different story. These coins have moved very similarly when you look at the squiggly lines, but percentage-wise, the moves have not been correlated. And this is something that a lot of people need to understand when it comes to correlations. Correlations in price movements is about more than just whether both are up on the same day or down on the same day. The percentage that those compared values move actually matters. And let me show you why. When we go into the 7-day here, now what I just showed you with XRP is a bullish sign that XRP set a higher low, right? Bitcoin did not. Bitcoin on the 7-day, at the beginning of the week, its low was 71.98. Its new low is 71.72. They both moved the same way all week, yet one of these set a lower low while the other set a higher low. This is why you cannot say these are correlated just because they move the same way, right? I know a lot of people in the space like to say that they are. I know that a lot of people pretend that they actually know what they're talking about when they don't even trade these assets and therefore don't understand the difference between signals that a market's giving you as to the directionality. But I just want to make that clear about the situation we're in with XRP. And the reason that this is important, the reason I'm bringing this up, is because obviously a lot of people see these two things as correlated. They see Bitcoin on a downward trend, and what does that do? That gives those people FUD. That is fear, uncertainty, and doubt about the potential price movements of XRP because of the current price movements we're seeing with Bitcoin. But again, as I just pointed out, when you look at the actual movements, the actual figures involved, Bitcoin is on a downward trend, having set a lower high and now a lower low, while XRP returned to its previous high and has now set a higher low, meaning that Bitcoin is in a descending wedge while XRP is in an ascending triangle. Very different patterns, very different technical projections that can be drawn based upon those patterns, right? Now, obviously, as many people know, TA is not 100% accurate. You can't always trust it, and a lot of times you'll get burned if you try to treat it as if it's, it's like a science, right? I'm not saying that TA is reliable. I'm just saying that the patterns are different, despite to the untrained eye, these things appearing to be moving the same. So, let's jump into this article here. Cryptocurrency, handling emotions, FOMO and FUD. How to both control emotions and view the cryptocurrency market when invested in the unpredictable price moves seen in Bitcoin and other cryptocurrencies. FOMO, also known as the fear of missing out, and FUD, fear, uncertainty, and doubt, are two opposing terms bandied around the crypto community on a regular basis. What we will look at in this article is how best to control emotions when price is moving both up and down, as well as what actions you should and should not be making when investing in the crypto market. The roller coaster ride that is investing in the likes of Bitcoin or any of the 2,000 plus altcoins that exist is like nothing else in today's traditional markets. It is not rare to see greater than a 10% price moves over an 1 hour period. So it is important to keep a firm grip on your emotions at all times, especially when you have money on the table. This is very true. Cannot go without stating, but this is a fairly long article, so I'm not going to put in my 2 cents too much. Also, because I want to get to the news that the video is titled at, but stick by. I know that some of you understand this, but to the new people in the space who are just seeing the price going down and they're focused on the fact that they're focused on the fact that the price isn't going up, you need to keep these ideas in mind, keep this understanding that is being presented in this article in mind, right? So cryptocurrency FOMO. There is not much liquidity in the cryptocurrency market at present, meaning there is not many buyers or sellers. In addition, the market participants are largely irrational and buyers sell their holdings based on price movements alone. For these reasons, there are regular pumps in the market, which is nothing more than FOMO, which sees the price move up. The simplified FOMO process is as followed. One person buys Bitcoin because they see the price go up. Then the next person sees the price go up further and in turn thinks the price will rise to continue, so on and so on. Obviously, this is not sustainable. It is irrational. But moves of that nature, as charted below, showing Bitcoin to USD, how Bitcoin went from 7,200 up to nearly 7,700 this week. I think this is of this week. At any rate, it's irrational, but the moves of this nature, as charted below, in a short time period, are frequent without any real explanation. And there is no explanation other than just that, FUD and FOMO. It's pump and dumps or dump and pumps. Similar to what we saw in XRP, right? This move that we saw today in XRP, this is technically a dump and pump because we dumped hard from our prior high here at 19.5 cents, 19.4, and actually set a new high at 19.42. It's only a smaller high, but we have now pumped higher than the dump. And the same usually happens with pump and dumps. When you have a pump, typically the price dumps lower than the previous low. At any rate, crypto, moving on to FUD. So just as FOMO, the opposite is FUD. This is effectively a person seeing the price go down, not understanding what is going on and selling. This can be some of or all of their position. Through fear, the price will continue to fall. And that's what a lot of people are feeling in the XRP community right now, and in crypto in general. This is why it is important to keep your emotions under control, though. We'll get into that. So the problem in crypto is because it is such an irrational market, the vast majority of the money in cryptocurrency assets is immature or amateur traders and investors. Many of these people can be scared out of a position. This is not surprising when we see retracements of 95+% for the top 10 cryptocurrencies by market cap. The declining price has a bit of a domino effect, the opposite way to that of Fomo. Sharp movements down in the price often occur after significant moves up, as the market corrects to reflect its true value. So, current market conditions, FUD reflects the current bearish sentiment in the cryptocurrency market, meaning that negative news will currently have more of an impact on price downwards than positive news upwards. This is because the market speculators are highly concerned. After watching several $100 billion shaved off the market valuation over the last 2 years, as pictured below, showing our peak at near $800 billion. Actually, I think it was over $800 billion in January 2018, but it's not seeming to show that here on CoinMarketCap. But now we're all the way down at below 250 billion. Now I think we're technically under at 200 billion too. Yeah, 191 billion, right? So the market sentiment will eventually change. Until we see this switch of momentum, though, we are stuck in a bit of a limbo, a downward limbo. However, when sentiment changes, it will most likely open the floodgates. The same traders that were shorting, selling Bitcoin at low prices, will be buying at higher prices. The same can be said of those people who were buying in 2018, 2017, right? Those people who sold out, or who bought in rather at, at, we'll say $7,000, sold when it got to $9,000, and then bought again when it got to $12,000 or $13,000, and then they lost half their money when the market dumped out, right? The same happens in bear markets, and that's what a lot of people don't keep in mind in this current marketplace. This is why I'm actually covering this article for you, because so many people, so many comments that I see are people who are so short-sighted that only see the price going down right now and think that this is how the market's going to go forever. Now, many coins are going to fail. The vast majority are going to go to something like less than a cent in valuation, and they're never going to return. But those coins are coins that have no utility value behind them. They have no fundamentals building behind them. They're abandoned projects. XRP is the least abandoned project in this space. It is the most fundamentally well-developed project in this space. Bitcoin is the most well-known. It's known by almost everybody in the world at this point. I'd say probably at least 60% of the general public know about Bitcoin. So it's not going to die simply because of name recognition, while XRP is not going to die because of utility. And the same can be said of a few other digital assets out there as well. Tezos, for example. Chainlink, another example, right? These tokens are going to survive this bear market because of either name recognition, and therefore they will get investor recognition in the turn of the market, and again, because of fundamentals. At any rate, to go on here, the flipping of the short sellers buying at higher prices, this goes completely against investing basics of buy low, sell high, making no logical sense due to the current irrationality of the cryptocurrency market. The best thing to do is strap in and understand the basics of why the market moves in certain ways. So, I'll read this next section, but again, understand, not financial advice, even if what is said here is absolutely true and should be understood about investing in general. But anyways, in the simplest trading sense, there is more sense in shorting, saying the market will go down, given current market conditions, at least for the short term. However, if you are investing, which is the general view we take, low prices should reflect a good buying opportunity. Buy the dips, accumulate coins, and dollar cost average on the way down. I say this all the time, right? You need to be, if you are an investor in this space, you need to be dollar cost averaging as the market goes down so that you can bring your average down, and that way the amount that you've put into this market as a whole will eventually be near, if not lower than, the current price, even as the price is in decline. Anyway, then when it inevitably moves up, you will be thankful you did, and you will eventually. Don't know if that'll be in a month, don't know if that'll be in 6 months, because as everybody knows, cryptos can move hundreds of percent on the drop of a hat, up or down. Well, not down, 60, 70% down. We've seen 60% negative days, but we've seen 200%, 300% up days. Even in XRP, even in September of last year, the price went up 300% in literally one day. Imagine if you went up 300% from your current position. At any rate, right now is a good time to pick up some cheap coins, tokens, whichever your preferred cryptocurrency might be. Could the market move down significantly more? Of course it can. But if you are someone sitting on the sidelines and putting money in the market only when you see the price moving up substantially, you could be quite easily left behind. In fact, this behavior would likely lead to buying into a pump and dump. Take a look at Ethereum's price action for the last bull run in January of 2018. Ethereum remains the second highest market cap coin behind Bitcoin, but like other altcoins is subject to wild price swings. And so here it's obviously showing the price movements of Ethereum, and you see all these green days, 13%, 7, 3, 0.1, 4.6, 8, 6, almost 7, 2, but then on the 16th of January, it dumped 28% and basically erased all of these gains, right? So imagine, they go in saying, imagine moving into the market January 14th on 2018 purely because you had a couple of weeks of growth. It is important to note this price movement was speculation only. Nothing fundamentally changed in the cryptocurrency market. It was FOMO-driven event. So to avoid cryptocurrency FOMO, this leads to my next point, or the article writer's next point. Do not FOMO into a position. If you do this, you are trading emotionally and not thinking like an investor. Likewise, if you see the price selling off, but nothing has fundamentally changed, do not sell out of fear. FUD. Again, don't be selling when the price is going down. This is when you're supposed to be buying. Buy when there's blood in the streets. You sell on green days. You sell on the days where your position's actually up significantly. And if you're going to be that's if you're being a trader, right? If you're a long-term investor, then you buy on red days and you hold through the green days and you wait for that day when it hits that price that you're ready to take out, or whatever. However, whatever your game plan is, again, I've shared my own in other videos, but not financial advice to you. You need to come up with your own trading, investing strategy for how you participate in this market. But you should absolutely have exit points set for points that you believe are likely to be reached over however long you intend to be invested in this market. So, the irrelevance of daily price action. You almost have to train yourself to look at the wider scope of what is happening in the cryptocurrency market. Too many people focused on the day-to-day fluctuations, but ultimately this is a multi-industry changing phenomenon. The best way to see the big picture is to think long-term. If you're looking at a Bitcoin graph, for example, look at the overall trend over years, not hours, days, and weeks. That way you will see the real price action, real market development, and real big picture. The market will just go ahead of itself from time to time and undergo significant pullbacks to align with reality. This is not to be unexpected, especially when we see hundreds of percentage point growth in bull run periods. So the HODL strategy. The term HODL, hold on for dear life, as they like to turn the acronym into, is a well-known phrase in the crypto community. It is our opinion to hodl is the best course of action in these unpredictable market conditions. To hodl reflects the idea that you believe in the underlying technology and the technological advancements. If this is your stance, you should not be selling through fear of further price declines. Instead, you should keep both eyes on the fundamentals. You can look at these situations as an opportunity to accumulate or even diversify your portfolio. So, let's now have a look at the fundamentals, and we'll wrap up this video with this relatively short article over here from the Crypto News Flash, again titled, Ripple's XRP can now be purchased at 3,000 ATMs worldwide. So the adoption of cryptocurrency has a significant impact on the confidence building and use of the new technology in people's everyday lives. General Bytes is the largest manufacturer of ATMs worldwide and announced a few hours ago that it is expanding its own portfolio. At the provided devices, users can buy different cryptocurrencies easily and quickly. The ATM is a payable gateway that provides the ability to purchase cryptocurrencies such as Bitcoin, Ethereum, or XRP by debit or credit card. According to General Bytes, it has set up more than 3,000 ATMs worldwide, mostly to prominent locations such as subway stations or large shopping malls. In a recent post on Reddit, the company explained that since yesterday, all ATMs already installed offer the possibility to buy XRP. Older devices may also offer XRP. However, it should be noted that all devices are individually owned, so the devices installers decide which cryptocurrencies are offered at the ATM. To date, General Bytes has sold a total of 3,117 ATMs, supports more than 123 different fiat currencies, and has processed more than 16 million transactions. Pardon me. The ATMs have also been sold to more than 63 countries worldwide. The map below shows where General Bytes devices have been installed worldwide. No, there is not. So don't bother looking. There's not a graph here. That's strange. He says there's supposed to be one, but is it on here? CoinMover? Maybe? Let's check that. We'll let that load. At any rate, so the latest devices have been installed in Westwood Shell, Boston, USA, on Route 1 Automile opposite of Porsche and Mercedes-Benz. Interested parties can easily and quickly select the respective cryptocurrency and the corresponding purchase amount and then enter their wallet address. The amount is then debited from the debit card or credit card, and the cryptocurrency is sent to the wallet address entered. So adoption of XRP is being driven forward. As we reported earlier, Ripple's venture capital firm Spring announced in mid-September a $1.5 million investment in crypto ATM company CoinMe. CoinMe is this one. Okay, yeah, so just to show off before we finish off, here's the map, obviously, of all the ATMs. As you see, most of the ATMs are in the northeast and southeast of America, with a fair few down in the actual south, down in the Texas, mostly in California actually, is where most of these are located. Over 600 in Southern California, 790 in the Delaware, New Jersey region. So tons of these in America, especially in heavily populated areas of America. So to get back into this, CoinMe is one of the largest ATM providers worldwide and has already sold more than 2,500 ATMs. Ripple intends to use the investment to promote the adoption of XRP. The investment will be used to bring new devices into service. In addition, Ripple has also secured access to other key markets through wise investments. For example, Ripple invested in the Vega protocol to prepare the introduction of XRP for the derivatives financial market. Spring has also invested in the Flare Networks project to expand the scope of XRP. In the future, it should be possible to conclude smart contracts on the, I guess that would be right, to close smart contracts on the XRP ledger using Flare Networks. So despite Ripple's continued expansion, the price of XRP continues to show a downward trend and is currently at 19 cents USD. So again, as we covered in the article previous, do not pay attention to the price other than if you're looking to buy more while the price is at a low. You need to be paying attention to fundamentals because these are the kinds of things that are going to dictate the future success or not success of a digital asset. If you cannot find substantial fundamental adoption and growth of the asset outside of its price during the bear market, then that is a very dangerous asset to be investing in, even in a bull market, or even in a bear market where it's significantly, all the assets right now are significantly undervalued, right? So no, this is a bit longer than a normal one, but I really wanted to cover that article on market emotions and really break down for you guys what's going on with the price right now and help everybody get themselves in the right frame of mind for where we should be. So as always, if you're new to my channel and you made it this far, definitely hit that subscribe and ring that bell so you can be notified of my newest videos. And don't forget to leave me a like, and I'll see all of you in the next video on Mars.